Hey everyone, welcome back to the channel. Today we're diving deep into Adobe, one of the most important, yet often overlooked tech giants in the world. You probably know them as the company behind Photoshop, Premiere Pro, and Acrobat, but there's a lot more going on behind the scenes. In this video, I'm going to break down how Adobe actually makes its money, because it's not just about creative software anymore. We'll look at their latest earnings report, what's working, what's not, and what it signals about the company's direction. We'll also talk about AI, which is either Adobe's biggest threat or its biggest opportunity right now. With companies like Meta, Canva, and even OpenAI pushing out new AI-powered creative tools, Adobe is facing serious competition. But they're also making big moves with their own AI platform, Firefly, and tools like GenStudio. And finally, I'll give you my honest take. Based on everything we know right now, is Adobe stock a buy, a sell, or a hold? If you're interested in tech, investing, or the future of creativity in the age of AI, this is the video for you. Let's get into it. So let's break down how Adobe actually makes its money. At a high level, the company operates across a few key areas, but the heart of its business is what they call digital media. This is where you'll find all the well-known tools like Photoshop, Premiere Pro, Illustrator, Lightroom, and Acrobat. These products are bundled into subscription services like Creative Cloud and Document Cloud, which give users ongoing access and updates in exchange for a monthly or annual fee. It's a highly profitable model, and it's used by everyone, from individual creators and students to big marketing teams and production houses. But Adobe isn't just a creative software company anymore. Another major part of their business is called digital experience, and this is all about enterprise solutions. Think marketing automation, content personalization, customer journey analytics, and more recently, AI-powered platforms like GenStudio. These tools are built for large brands that need to create and manage a huge amount of content at scale, and deliver it in a way that feels personalized to each customer. In this space, Adobe is competing with giants like Salesforce and Oracle, but it has a strong edge when it comes to connecting content with data. There's also a smaller part of Adobe's business that comes from older software and some advertising technology. It's not where the company is focusing its future, but it still brings in steady revenue and supports a niche group of users. What really sets Adobe apart is its shift to recurring revenue. Most of what it earns now comes from subscriptions, which means it has a predictable income stream that investors love. And with the rise of AI, Adobe is now positioning itself not just as a tools company, but as a platform that helps businesses and creatives generate content faster, more efficiently, and more intelligently. So while Adobe started out as the company behind Photoshop, it's now evolved into something much bigger, a creative and marketing powerhouse that's deeply integrated into how content is made and delivered across the internet. Adobe just reported a strong quarter, showing solid growth across its core business and leaning hard into AI as a major driver of future revenue. The company continues to prove that it's not just a creative software brand, it's becoming a serious force in enterprise, marketing, and AI-powered content creation. For the second quarter of fiscal year 2025, Adobe brought in $5.87 billion in revenue, which is up 11% compared to last year. Earnings also came in strong, hitting $5.06, marking a 13% year-over-year increase. Cash flow from operations reached $2.19 billion, the highest ever for a second quarter. These are solid results across the board, especially in a competitive and fast-changing market. Most of that growth came from Adobe's digital media segment, which includes Creative Cloud, Acrobat, and Firefly. That part of the business brought in $4.35 billion, up 11% year over year, with annualized recurring revenue growing to over $18 billion. Adobe's digital experience segment, which focuses on enterprise marketing and customer data platforms, delivered $1.46 billion in revenue, also growing at a healthy pace. Subscription revenue in this segment rose 11% year over year, showing strong demand from large organizations that need scalable, data-driven content solutions. What makes Adobe especially strong is its subscription model. Over 90% of its revenue now comes from subscriptions, giving the company predictable cash flow and long-term customer retention. Whether you're a solo creator or a Fortune 500 brand, Adobe likely has a product in your stack. And this quarter showed that usage continues to grow. And speaking of usage, Adobe Express and Firefly were two major highlights this quarter. Express, Adobe's lightweight, AI-powered design tool, is gaining traction with both business users and creators. Adobe said the number of monthly active users across product lines is now over 700 million, with over 25% growth in Acrobat and Express combined. Express tools built into Acrobat saw usage grow 3 times quarter over quarter and more than 11 times year over year. Clear evidence that AI-driven content tools are finding real adoption. On the AI front, Firefly continues to surge. This is Adobe's generative AI platform for design, image creation, and content generation. This quarter, Adobe crossed 24 billion total generations across Firefly and Creative Cloud. The Firefly app saw traffic jump more than 30%, and paid subscriptions nearly doubled compared to last quarter. Adobe also rolled out new pricing tiers for Firefly at $10, $20, and $200 per month, giving different types of users the ability to scale up based on their needs. And Adobe confirmed that its AI-influenced revenue is now tracking in the billions, well ahead of expectations. Another bright spot was GenStudio, Adobe's AI-powered performance marketing platform. GenStudio helps brands plan, generate, manage, and launch marketing content faster and more intelligently using generative AI. Adobe reported over 45% quarter-over-quarter growth for GenStudio and confirmed new integrations with major ad platforms like Meta and Google, along with others like Snap and TikTok. Adobe wants to be the content engine for every performance marketing campaign, and GenStudio is how they're doing it. Adobe also continues to land big customers, citing wins with brands like Cisco, the County of Los Angeles, the NFL, and the Premier League. These aren't just software licenses. Adobe is embedding itself deep inside enterprise content workflows, marketing departments, and customer engagement strategies. On the financial side, Adobe also returned value to shareholders, completing a $3.5 billion stock buyback in the quarter, with nearly $11 billion still available under its current authorization. Looking ahead, Adobe raised its full-year outlook and issued solid guidance for the next quarter. For Q3, the company expects revenue between $5.875 and $5.925 billion, and earnings per share between $5.01 and $5.20. Digital media revenue is expected to land between $4.37 and $4.4 billion. So what does all this mean? Adobe is executing across every part of its business. Its core creative tools are still growing. Its enterprise solutions are gaining ground. Its AI products are gaining real users. And its long-term revenue model is solid and highly scalable. The company isn't just reacting to the rise of AI. It's actually building the future of how creative and marketing teams will work. Whether you're an investor, a marketer, or a creator, it's clear that Adobe is one of the few legacy tech companies that's truly evolving to meet the next wave of digital transformation. Now, while Adobe is making huge strides with Firefly and GenStudio, it's not operating in a vacuum. Big tech players, especially Meta and Google, are aggressively moving into the same territory. And they're not just experimenting, they're launching real products that directly compete with Adobe's core business. Let's start with Meta. Meta is working toward a future where advertisers can create full campaigns using AI-generated content automatically. Their goal is to let businesses upload a few product images, set a budget, and let Meta's AI generate the entire campaign. Images, videos, ad copy, targeting, and optimization. Some of this is already live. Meta now offers tools that can turn a few still images into animated product videos with text overlays, music, and motion graphics. No editing required. That's a serious challenge to Adobe, especially because Meta controls both the creative process and the distribution platform. If Meta can generate and place ads all in one place, small businesses might never feel the need to touch Adobe products. Then there's Google. Their latest video generation model, Veo 3, is a major leap forward. Built by Google DeepMind, Veo can create cinematic quality video clips from just a text prompt. It understands complex scene descriptions, camera movements, and artistic styles. And it's pushing the boundaries of what's possible with AI-driven video content, something that directly threatens Adobe's dominance in video editing through tools like Premiere Pro and After Effects. So what are the big challenges Adobe is facing right now? First, platform lockout. Companies like Meta and Google are building creative tools inside their ecosystems. If advertisers and creators can generate and publish content without ever leaving those platforms, Adobe could get cut out of the loop. Second, ease of use. Tools like Meta's ad generator or Google's Veo are built to work in seconds. Just type in a prompt and go. While Adobe's tools are powerful, they still have a learning curve. If Adobe can't match that simplicity with Firefly and GenStudio, it risks losing users who prioritize speed and convenience over deep control. And third, shifting perception. Adobe has always been the gold standard for creativity, but AI is redefining what creative work actually looks like. As generative AI tools take over more of the process, Adobe will need to reposition itself, not just as a toolbox, but as a creative operating system, a place where strategy, brand, content, and performance come together. So, with all the noise around Meta, Google, and these fast-moving AI tools, you might be wondering, can Adobe actually compete? And the answer is yes, absolutely. In fact, Adobe has some very real advantages that could help it come out ahead in this new AI-powered creative landscape. First, Adobe already owns the creative market. Tools like Photoshop, Premiere Pro, Illustrator, and After Effects are industry standards. Designers, editors, agencies, marketing teams, they're already trained on Adobe. And that means the company isn't trying to steal users from other platforms. It's trying to upgrade the experience for the users it already has. That's a massive head start. Second, Adobe has built deep trust with professionals and enterprises. While Meta and Google are rushing to make AI tools fast and easy, Adobe is laser-focused on brand safety, creative control, and quality. If you're a Fortune 500 company, you don't want your AI making wild guesses. You want outputs that match your brand, your tone, your compliance rules, and Adobe is one of the only companies building that kind of structured, responsible AI into its creative workflow. Third, integration. Adobe isn't just building random AI features, it's integrating them across its entire ecosystem. Firefly is connected to Photoshop, Illustrator, and Premiere. GenStudio works with Adobe Experience Manager, Workfront, Express, and even external platforms like Meta and Google Ads. That means users don't have to choose between AI and traditional tools. They can use both in the same workflow seamlessly. Fourth, monetization. Adobe already has a mature, high-margin subscription business. It doesn't need to chase user growth at any cost. It can focus on expanding value per user. And that's exactly what it's doing by layering AI on top of Creative Cloud, Document Cloud, and digital experience offerings. In other words, Adobe's not trying to go viral. It's trying to go deeper into the workflows that already drive billions in revenue. And finally, Adobe has decades of credibility in the creative space. People know what Adobe stands for. It has the relationships, the trust, and the infrastructure to support everyone from indie creators to global enterprises. That's not something you build overnight with a fancy new model or a viral demo. So while Meta and Google are racing to build quick, automated content pipelines, Adobe is playing a different game. It's building the infrastructure for premium, scalable, branded creativity in the age of AI. And that might end up being even more valuable in the long run. All right, that wraps up today's breakdown on Adobe. Just to be fully transparent, I do own Adobe stock, and for now I'm holding. I'm not adding to my position yet, because I want to see how this whole AI shift plays out, especially with strong competition coming from Meta, Google, and others who are moving fast with generative content tools. That said, I still believe in Adobe long term, and here's why. The company has a very strong business model. It runs on high margin, recurring subscription revenue, which makes it incredibly resilient. Its margins are some of the best in the software industry, On top of that, Adobe continues to grow both revenue and earnings per share year after year. Their past performance has been consistently solid, and that's what's keeping me invested for now. There's also the potential upside from acquisitions, especially with the Trump administration appearing more open to big deals. If Adobe picks up the right AI or MarTech company, that could unlock even more growth going forward. So for me, this is a hold to buy situation. Not jumping in with new money just yet, but definitely not walking away either. I'm staying close to this one and watching what unfolds. Thanks a lot for watching. If you got value from this video, make sure to like, subscribe, and hit the bell so you don't miss the next one. And drop your thoughts in the comments. Are you buying Adobe, holding, or staying out entirely? See you in the next video.